UK inflation cooled to 3% in January, down from 3.4% in December. Lower petrol prices, falling airfares, and cheaper food help push inflation down.
However, rising hotel and takeaway prices partially offset the decline. The Bank of England is watching closely, expecting inflation to approach its 2% target by April.
Unemployment rose to 5.2%, while wage growth continued to ease. The economy grew just 0.1% in the fourth quarter. Markets now expect the Bank of England could cut rates as early as March. After years of sticky inflation, the UK may finally be turning a corner.
ツマンおじ今日のニュースを読みます。CNBC UK inflation cooled markedly in January, boosting hours of Bank of England rate cut. By Holly Elliott, Wednesday, February 18, 2026. Key point: the fall in UK inflation was in line with economists' expectations. The decline was driven partly by a decrease in petrol price, the ONS said. The Bank of England expected the inflation rate to fall sharply to near its 2% target in April. The UK inflation rate cooled to 3% in January, according to our latest figures from the Office for National Statistics, ONS. Economists polled by Reuters had expected the consumer price index to fall to 3%, down from 3.4% in the 12 months to December. Core inflation, excluding energy, food, alcohol, and tobacco, stood at 3.1% in January, down from 3.2% in December. The fall in inflation to its lowest annual rate since March 2025 was driven partly by a decrease in petrol prices, the ONS chief economist Grant Fisher said in a comment on X. Airfares were another downward driver this month, with prices dropping back following the increase in December. Lower food prices are helped push the rate down, particularly for bread and cereal and meat. These were partially offset by the cost of hotel stays and takeaways, he noted. Sterling was flat against the dollars following the as expected data at $1.3562. The data will be closely analyzed by the Bank of England as it looks for further signs to confirm its view that inflation will fall close to the central bank's 2% target by April. UK jobs and wage data out Tuesday gave the BoE further signs of weakness in the labor market and on easing of inflationary pressures, with the employment rate rising to 5.2% in December, the highest level in 5 years. Annual wage growth, the key inflation metric closely watched by the central bank, weakened the late 3 months of 2025. Growth data released last week showed the wider slowdown continued, with the economy growing a meager 0.1% in the first quarter. We'll get another shot of economic activity in the country this coming Friday, when Purchasing Managers Index (PMI) data is released. Economists expected that the latest batch of data could prompt the BoE to cut its benchmark interest rate, currently at 3.75%, at its next meeting in March. Sticky inflation has been the Achilles heel for the UK for a number of years, requiring the Bank of England to keep interest rates restrictive. But it appears that we have finally turned the corner, Jara Nocht, global market analyst at JP Morgan Asset Management, said in emailed comment Wednesday. Today's data shows the meaningful step down in headline inflation, with broad-based disinflation across sectors. Crucially, this progress should continue, with headline inflation likely to fall in touching distance of the 2% target by April, he added. The recent moderation in wage growth should also help to keep all important service inflation, which has been a thorn in the Bank of England side for the numbers of years, at bay. Nocht said, noting that the BoE likely has room to deliver another couple of 25 basis point rate cuts before hitting the neutral rate. Based on the latest string of employment data, I would expect these cuts to be front-loaded, he said. The gloomy picture painted by recent UK growth figures and Tuesday's evidence of lackluster job market has increased the likelihood that the BoE will cut rates at the next meeting in March. Dennis Holson, head of financial analyst at the AJ Bear, said in emailed comments Tuesday. It has also increased expectation that rates could reach as low as 3% by the end of this year, Holson added. 以上です。